Hey everybody, Smart Silver Stacker here. The US is the largest producer of fossil fuels in the world. According to the US Energy Information Administration, US production of oil and petroleum liquids in 2021 was just shy of 19 million barrels per day, roughly 20% of total global output. So you really don't need to be worried about an energy crisis, right? After all, we produce more energy than anyone else. Well, here's the thing. We consume more energy than everyone else too, by an enormous margin. You see, last year we produced just under 19 million barrels of petroleum per day, but we consumed almost 20. And as a result of our economy's tremendous addiction to cheap fossil fuels, the US is just as vulnerable to tightness in global energy supplies as anyone. And in the coming months, the global energy supply will be very tight indeed. And that is what we are going to talk about in today's video, how this looming energy crisis is likely to play out, and the potentially very serious implications for gold, silver, commodities, and the dollar. We're going to cover a lot today, so stick with me and let's get to it. Okay, there is plenty to cover today in regards to the energy market. We have got OPEC production cuts. We've got a lack of investment in US energy production. We're going to talk more about that and why that's a huge problem and why these companies are not being incentivized to invest for the future. And at the same time, there's a whole other chapter of this thing playing out in Europe right now. We're going to cover that too and how this energy crisis is really just getting started. It's only in the nascent phases right now, and it's likely to be playing out for years to come. And also why this is important for inflation, commodities, food, and precious metals, and specifically silver. And speaking of precious metals, today's video is brought to you by SD Bullion, my preferred bullion dealer.
Get ready for SD Bullion's Monster Box sweepstakes that includes 500 Silver Eagles. You could be the next lucky recipient of a phone call like this.
This is Dr. Tyler Wall, CEO of SD Bullion. Well, I'm calling you to let you know that you won the SD Bullion giveaway of a monster box of Silver Eagles.
So click the link below for your chance to win.
All right, so let's talk about the most immediate and pertinent energy story first, the OPEC production cuts. At their meeting this past Wednesday, OPEC Plus announced a production cut of 2 million barrels per day. And this was despite significant pressure from the US not to make cuts or to limit the cuts. And the fact that Saudi Arabia specifically scoffed at this pressure and OPEC proceeded with cuts, it's a sign of the fracturing of the existing world order. It seems like Saudi Arabia and other oil-producing countries may be moving away from the US and into the BRICS camp. This cut to oil production, it is going to put a lot of upward pressure on oil. I mean, we saw that today. Oil was in the green in a big way, back above $90. But possibly what's more important here is the breakdown of US-Saudi relations. Several months ago, the Saudis were talking about accepting yuan in exchange for oil payments. And judging from the way things are going, we may very well see them begin to accept alternative currencies in exchange for oil. Who knows? Maybe gold, maybe yuan, maybe rubles, or possibly, those BRICS nations, they are working on a currency based on a basket of their national currencies. It's kind of like the IMF's special drawing rights. Possibly we could see Saudi Arabia pricing oil in that currency, especially if they do end up joining BRICS. And this is all very ominous, in my opinion, for the long-term outlook of the dollar as the world reserve currency, because the petrodollar system, which has been in place since the 1970s, has been a bedrock of US dollar hegemony. And that whole system is based entirely on Saudi Arabia playing ball and pricing their oil in dollars. And the dollar, for a purely fiat currency, it's already looking pretty long in the tooth. It's been around for more than 50 years now, and it's devalued a lot. Gold was $35 an ounce back in 1971 when we started this experiment, and now it's over $1,700 an ounce. So to me, the big threat to watch out for here is the risk of some serious de-dollarization in the energy market. Bilateral trade between China and Russia and India has already been largely de-dollarized, and if Saudi Arabia gets in on that party, it's going to be a real problem for the dollar. Now, you would think if OPEC is cutting production, that would be an opportunity for US producers to profit, right? Well, on October 4th, Reuters reported that U.S. shale oil producers are remaining on the sidelines even if OPEC Plus cuts output. And this is a quote from Andy Hendricks, the CEO of driller Patterson UT. He said, "I don't know of any producer that looks at the possible production cuts and says, I have an opportunity to fill that, as each individual energy company will focus on what makes economic sense for them." Now, an important thing to note here is the nature of U.S. fossil fuel production. A lot of it is coming from shale oil these days. You know, the shale oil revolution, which made us such a huge producer of fossil fuels, and that is all accomplished through fracking. But something you need to know about fracking is this term EROI, or Energy Return on Investment. And that basically just means how much energy you need to invest to get a certain amount of energy out of your oil well. And, you know, you think about like the Beverly Hillbillies, the guy's running around in his backyard, he takes a shot with his rifle, and all of a sudden, crude oil's bubbling up out of the ground. Well, those days are gone. All of that easy oil, you know, those salt domes, all that stuff, that has been extracted largely. And back when there was that easy-to-access oil, the EROI was about 100 to 1. So you invest 1 barrel worth of energy, and you get 100 barrels out of the ground. So that's pretty good. That's a good business to be in. But the thing about fracking is it is a much more complicated process than just drilling a hole in the ground and extracting petroleum. You know, you've got to inject steam, you've got to inject these specialty chemicals into the ground to extract the energy, you've got to do horizontal drilling. Like, this oil is not as easy to access, and as a result, the EROI with fracking is much lower. It's somewhere in the range of 5 to 1 to 10 to 1. And so think about that. When you're investing 1 barrel of oil worth of energy just to get 5 out of the ground, that is not nearly as lucrative a business. And you have to be very confident about the future to be investing in new wells with an EROI like that. One trend that we are seeing with shale oil producers is they are opting to re-frack old wells, a process where they go and they do a fresh injection of steam and chemicals and try and boost the output of these existing wells in the short term, because that's about 40% cheaper in some cases than drilling a new well. And so this trend, this tells us that producers are looking to boost short-term profits and to take advantage of the current higher prices, but they are wary of longer-term investments. And you have to remember, shale oil producers, they suffered a lot back in 2020 when the oil price crashed. They had borrowed a lot to invest in all those wells, and because of the investment-intensive nature of shale oil and fracking, these companies required much higher sustained prices in petroleum to remain profitable, and a lot of them went bankrupt that year. And so they're already somewhat wary of repeating that mistake, and also at the same time, we've got an administration in Washington, when the price of oil goes up, it starts talking about windfall profit taxes. And this isn't just the president, I mean, this is also people in Congress. And this is not the way to encourage investment in new energy production. Why would a company take the risk of investing capital if it thinks, you know, well, we could profit, but if we do, it's just going to be called a windfall and it's going to be confiscated via taxation? Because profits are not a windfall. Profits from a productive investment that benefits society, it's literally the entire incentive for the investment in the first place. That's just how capitalism works. So you can't take that away and then expect oil companies to rush to invest additional capital in these risky ventures. And if you're watching and you think that we should let energy companies keep their profits to invest for the future and reward their shareholders, do me a favor and smash the like button down below. It does help the channel out a lot and it helps spread this information. Politicians always want to have their cake and eat it too. They want these companies to go out and take all the risk, and then if they lose, well, you know, it's tough luck, but if they profit, well, we're going to need a cut of that. It's almost like the opposite of how the banking industry seems to work, where, you know, insiders get to keep all of the profits. But if they fail because they took on too much risk, then the taxpayer picks up the tab in the form of bailouts. But hey, that's a topic for another video. And while the powers that be, they do want to tax fossil fuel companies, they are simultaneously giving tax incentives to green energy producers. There's a whole portion of the Inflation Reduction Act that was just passed that is actually geared towards promoting green energy. Of course, you know, this whole thing is likely to make inflation worse, and I'm not under any illusions about the government's ability to fix an energy crisis by just, you know, writing some words on some paper and then taking a vote on them. But still, this type of policy is important to note because of the impact that it's going to have on the price of energy, and also In this case, specifically on the price of silver, because silver is a big component in solar panels. And if we start seeing a bunch of subsidies and incentives to go green, that is going to mean more physical silver being taken off the markets. We've already seen the amount of silver consumed in the production of photovoltaics increase from 55 million ounces in 2012 to a projected 127 million ounces in 2022. So this is not an insignificant factor in the silver market. And, this move towards green energy, and yeah, I know the government's behind it. It's likely not actually green. It probably means, somehow more energy is going to get consumed and more greenhouse gases will be emitted because that's just how government projects and central planning work. But this move is also likely to put upward pressure on a number of other commodities like nickel and copper, which are also very important for things like batteries, electric vehicles, and electrical infrastructure. Okay, so we've got a tighter total energy supply, we've got the world deglobalizing and fracturing into rival camps, the US is failing to incentivize new energy production, but the real ground zero for this unfolding global energy crisis is in Europe. European gas prices are trading at more than 10 times the price they were 2 years ago. Electric bills are skyrocketing, industry is shutting down, and as we head into winter, people are literally going to be freezing in their homes. It's crazy. In Warsaw, in Poland, it's now being reported that the smell of burning garbage has become pervasive throughout the city, as people are burning whatever trash they can find to keep warm. And Romania just implemented price controls on firewood, which is now in incredible demand as people are brushing off the old wood stoves. And the situation there has been degenerating for months, but it's really getting serious following the sabotage of the Nord Stream 1 and 2 pipelines last week. And there's so much speculation about who was behind that. I don't know that we'll ever know for sure the answer to that question, but one thing I've noticed is that a lot of people seem to be very certain that they know the answer to this question, one way or the other, whether they blame Russia or the US or some other party. And I do think it's important to remain objective here and just ask yourself, who benefits? Qui bono? And I will say that, at least to me, it seems hard to believe that the Russians would sabotage their own pipeline. I mean, maybe in some strange, circuitous twist of logic, they might have some motivation for that, but I am not entirely convinced. And if we just apply Occam's razor to this question, the Russians blowing up their own pipeline does not seem to be the simplest explanation. But one thing is for sure, and that is that these pipelines are going to be off for some time, probably forever, because even if it is possible to repair them, why would they? And who's going to ensure such a project? And really, there's no need from Russia's perspective to fix the Nord Stream pipelines, and they'll likely just be focusing on expanding projects like the massive Power of Siberia pipeline, which is delivering Russian natural gas to China. And this, of course, is going to mean higher energy prices in the West, in Europe and the US, rising inflationary pressures, and more cheap energy and economic fuel for places like China and India, who have been quite happy to snap up excess Russian supply. And while European nations are seeking out replacements for the loss of Russian natural gas from places like Israel, Singapore, and the US, any new pipelines will take years to construct, and existing liquefied natural gas infrastructure is not sufficient to fully replace what has been lost. And in addition to that, shipping liquid natural gas via tankers is a much less efficient and more costly process than simply sending gas through a pipeline. So this crisis is really starting to get out of hand, and it's likely to get a lot worse by the end of the year. We've still got the EU and the UK ban on insurance for Russian oil tankers that is supposed to go into effect at year-end. And if that plays out into an already very tight energy market, the effects could be disastrous. Russia is a major exporter of crude oil, and even if they aren't exporting to Europe, for example, the supply that they provide still helps to keep global prices lower. And if suddenly their tanker deliveries are disrupted because they aren't insured, that could create a sudden spike in the price of oil. And I don't think that we can count on any schemes to cap the price of Russian oil to protect us from this. Now, one factor that has been helping to keep energy prices lower has been the steady sale of oil from the Strategic Petroleum Reserve, to the tune of about 1 million barrels of oil per day, or more than 5% of total U.S. consumption. And this is an almost comically short-sighted solution to rising energy prices. I mean, it would be funny if it wasn't such a serious problem, and it's obviously a politically motivated move aimed at easing pressure on consumers before the U.S. midterm elections in November. And on this news of OPEC production cuts that we just got, the president announced that the oil sales, originally scheduled to stop at the end of October, will now continue through the month of November. But this is a trick that you can only pull off so many times because the SPR is limited, and it's already sitting at the lowest levels since 1984. And once this extra supply from the SPR is removed, whether that's because the administration halts the sales or simply because the SPR becomes completely depleted, that's going to be one more factor pushing the price of oil much higher. And, an energy crisis on its own, that would be bad enough. But this is all playing out against a backdrop of rising inflation, a severe global recession, and the biggest debt bubble in the history of the world. So it seems like it's within the realm of possibilities that if we do get a spike up in the price of oil, it may just be the straw that breaks the camel's back for this global economy. Because if there's one lever that you want to pull to affect almost everything else in the economy, it's energy. Almost all economic activity, whether it be manufacturing, transportation, refrigeration, agriculture, chemicals, pharmaceuticals, mining, all of it shares one major input cost in common, and that is energy. And the response from our leaders, it's likely to exacerbate the problem, not fix it in any meaningful, lasting way. Already, the Biden administration is weighing a ban on the export of gasoline. The UN is calling on central banks to abandon rate hikes and instead resort to price controls to fight inflation. And Europe is exploring price caps and nationalization of utilities as they scramble to fix a fundamental supply shortage with laws, regulations, and central planning. Never mind that such an approach has literally never worked in history, despite being tried many times, and instead it's likely to just lead to outright shortages, rationing, and possibly even rolling blackouts and the failure of the power grid. Just ask anyone in Venezuela, a country with enormous reserves of petroleum that because of its subsidies and nationalization of its energy industry, can't even keep the lights on. So what can we do to get prepared? Well, if you have the resources, it might not be a bad idea to invest in some solar panels or some other form of off-grid power. And you might want to stock up on some food too. Don't forget that modern agriculture requires tremendous energy inputs to keep everyone fed. Acquiring a more fuel-efficient vehicle might make sense, especially if you do a lot of driving. And if we do see spiking gas prices, who knows, a monthly payment on a scooter or a small fuel-efficient car, it might be completely offset by the fuel savings if you're a commuter. And some precious metals might be a good thing to get your hands on too. As energy prices soar, the cost to mine this stuff is going to go up precipitously. Combine that with the inflationary pressures that are likely to accompany this crisis, and I think you've got a pretty solid recipe for much higher commodities across the board, and gold and silver will be no exception. And silver, I believe, is really disproportionately set up to benefit here, given the possibility of these green initiatives and solar subsidies, which could possibly consume a large amount of physical metal. So let me know what you think about this energy crisis. What are you doing to get prepared? And when do you think it could kick off in earnest? Or do you think that we won't have one at all? Leave me a comment down below to let me know. I always love to hear what all of you have to say. Thank you very much for watching. Stay safe and happy stacking, everyone. Smart Silver Stacker, out.